Chapter 3.3, we're going to journalize transactions that affect owner's equity accounts and also receiving cash on account in a 5-column journal. So before we get started, 3 good questions for this one. First question is, transactions are recorded in alphabetical order, true or false? Answer is false. They are actually recorded in chronological order. And remember, since we are using the accrual-based system of accounting, we record all transactions when the sale happens, not when the cash is paid. When cash is paid for insurance, the balance of prepaid insurance is decreased. When cash is paid for insurance, remember, insurance is one of our weird ones. It technically is an asset, although a lot of students like to think of it as an expense. So therefore, the account is increased because we have to use it. Later on, once we will calculate what happens when we've used our insurance and insurance expense does come in, but we buy insurance ahead of time, therefore it is an asset. Double entry accounting assures that debits equal the credits. That is true. Remember, our debits always must equal our credits. All right, so we're continuing on. Again, seeing a lot of transactions that we've seen before. If you see our first, using the multi-column journal as well. Again, if you see that first transaction, paid cash for rent, rent is an expense, cash is an asset, right? So we're going to credit cash, debit the rent expense. Very similar. We've done this. C6 indicates that my source document is a check, which means I'm going to be using my cash credit column. Little tip for you there. This is the first entry on this page of the journal, so I do write Feb 12. My account title that describes my general debit and credit is going to be rent expense. My doc number is C6. My debit is 200 and my cash credit is 200. Now, for this lesson, we are actually talking about 2 newer transactions, and now we're going to start using our sales column. We have not used our sales column up until now, and so we're there. So now, here's the deal. We have received cash from sales. So underline the nouns, circle the nouns, underline the verbs rather. So we have cash and sales. So we know our 2 accounts are going to be cash or sales. We know cash is an asset. We know cash is going to be receiving in this we're receiving cash in this transaction. Cash is going to be increasing. Since it's going to be increasing and cash is on the left-hand side of the accounting equation, we are going to be debiting cash. Sales is an owner's equity account, sits on the right-hand side of the accounting equation. In that right-hand side of the accounting equation, therefore, we are going to show an increase with a credit. And again, sales is going to be our 95% rule. 95% of the time, sales is going to be a credit. There are situations where it's not, but 95% of the time, we're going to credit sales. Get into that habit. So if we take a look at this, we move left to right in the transaction. We go 13. Again, I don't need to write out Feb because I did it in the previous transaction, and it's not the first one on the journal page, nor is it the first one of the month. My account title. Now this is a unique one. I am going to be using 2 special amount columns, right? I'm going to be using my sales credit column and my cash debit column. So since I do not have anything in my general debit and credit column, I'm gonna put a check mark, otherwise it looks like a V because of my technology, in the account title. That is basically just saying that, yep, I know what happened. Yep, I know this is blank because I know that everything you need to know is in the special amount columns of sales and cash debit. So I'm going to put my source document, a T13, and I'm also going to put a check mark in the post reference. I'll explain what that is for later in the next chapter, but just know that you have to do that. Now, I told you on last unit, when you see an M, that's an indicator for you that you're going to be using multiple lines. Here's my other little trick for you. When you see the T in here, that is going to mean you're going to need to use 2 check marks. T2. T2 check marks. That's a little trick for you as you progress on this to make this easy. It will become second nature, but that's a little trick that I found that works pretty well for students. So I'm not going to be using anything in the general debit and column, and I know that, and I'm recognizing it, and that check mark in the account title and the post reference indicates that. So I'm going to credit sales and I'm going to debit cash. That's all I have to do. It's actually pretty easy. Again, because I'm not using the general debit and credit columns, I don't have a description in the account title. Big mistake students will make is, number 1, they leave it blank. Number 2, they will write cash. Number 3, they will write sales. 99% of the time, you are not going to be writing cash or sales in the account title. Don't even think it's the right answer because it's not. don't write cash or sales in the account title. When we get later on, there's a situation where you will write sales as we're closing, or maybe if we're correcting, but generally speaking, you are not going to be doing that. Unless we're closing or correcting, you're not writing cash or sales in the account title. So please, 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 that's a big mistake that students make. All right, continuing on, next transaction, sold services on account to Covey Company. We've seen this transaction before. Underline the nouns, circle the verbs. You have services and on account, sold, and then we have, on account. So sold is past tense for sales, so I know I'm going to be using sales. On account, here we go. So now it's either accounts payable or accounts receivable. In this transaction, are we going to be paying or buying? Did we buy or pay on account? No. So it's not accounts payable. Rather, we sold and we're going to be receiving in the future. So therefore, it's accounts receivable. So now all of a sudden we start looking at this. Accounts receivable is an asset. Our accounts receivable is going to go up because they gave us a promise. They owe us money. Our sales are going to increase as well because we sold something. When we do this now, the thing that you have to realize, a lot of times students will put cash. Nope, we didn't receive any cash here. We just sold. Okay? So don't put this as cash. That's where a lot of students go wrong. Now, another little indicator for you, when you see that S1, remember I told you C usually will give you cash credit. R will give you cash debit. T is to, which means it's going to be a sales and a debit. M is multiple lines or memorandum, but S stands for sales. It's a sales invoice, but it stands for sales, so you know you're going to be using your sales credit column. Little trick for you. So the 14th, sold services on account. My account title is going to be accounts receivable Covey Company because that's going to be what's going into my general debit. Now, all I do is I just use my sales credit column. Now, again, a lot of people like to put cash in here. We didn't receive cash at all. Rounding out the last three on here, these are three transactions you've seen in previous lessons, so I'll go fairly quick over them. Paid cash for a telephone bill. We're going to debit the utilities expense, credit cash, right? Very simple. Put the date, accounts utilities expense, because that's going to describe what that $80 debit is in the general debit column is going to be. And then there's my C, which is my indicator that I'm going to use my cash credit. Paid cash to owner for personal use. Again, same transaction. We're going to use drawing because when someone withdraws money, that's called a drawing. Cash, paid cash is there. So the owner withdrew money, so that's decreasing the owner's equity. So we're going to debit the drawing. Cash is decreasing, so we're going to be crediting that. So it's a 15. Dennis Gilbert drawing, C8, debit, general debit for 1,500, which describes that 1,500 is coming out, is being accredited or linked to, I guess, Dennis Gilbert drawing, and the credit would be cash credit 1,500. Again, there's that C that tells us cash credit. Now, received cash on account from Covey Company. This is talking about a previous transaction. So on the 18th, we received cash and on accounts receivable. So cash is going to be going up because it's an asset. It's left-hand side. Therefore, we're going to debit cash. Accounts receivable is an asset, and it's going to be going down. So since it's going to be going down and it sits on the left-hand side, we're going to credit it $54. So I'm going to put the date. My general debit and credit description is going to be accounts receivable Covey collection. R2, again, there's my indication. R is a cash debit. Okay, so I'm going to credit accounts receivable, and then I'm going to debit cash for $54. Now, an error that students like to make on this one is they like to say their sales. We didn't sell anything. We sold something back on the 14th to Covey Company for $54. This is the payment 4 days later. Don't put sales for this last transaction on the 18th. Continuing on, 3 good questions. Here we go. Preparing source documents for each transaction is an application of which accounting concept? Is it entity? Is it unit measurement? Is it objective evidence? Or is it going concern? It is objective evidence. Again, you have to have the objective evidence and proof. There's a paper trail for everything. A business form ordering a bank to pay cash from a bank account is it a check? Is it a memorandum? Is it a receipt? Is it all of the above? Give you a hint. It is a check. Very good. On each journal page, the year is written when? Is it for each entry? Only the first entry. On the first line of each column or none of the above? It's only for the first entry. Hope this helps. Good luck on your assignment, and let me know if you have any questions.